Hi, I'm Shane Wallendorp from M&G Investments, and today I'm joined by my colleague Craig Simpson, Portfolio Manager for our global multi-asset funds, including the M&G Global Balance Fund and M&G Global Inflation Plus Fund. So thanks for your time today, Craig. Maybe to start off with, for those South African investors who haven't yet had the opportunity to meet with you, can you tell us a little bit about yourself and how you came to join M&G?
Sure. So I grew up in Aberdeen in the north of Scotland, did my varsity up there, as you call it, in South Africa. And I came down to London to be an intern, bizarrely, in the M&G macro team that I'm still in today. So on and off, I've been there since 1999. I left M&G to go back to finish my studies, came back down to London and spent the next 4 or 5 years as an analyst in equity markets in various institutions across the UK. And then I rejoined the team in 2004 as a portfolio manager, and I've been there ever since. So 20 years of looking at macroeconomics.
Thanks. And as a global investment manager, M&G boasts a team of investment professionals spread across the globe in major financial hubs like London, Zurich, and Singapore, to name a few. So how does your team, the multi-asset team, fit into that global structure, and where are you based?
Sure. So I'm based in London. We interact globally with our other investment teams across the world, including quite closely here in South Africa. And we've had a long history of asset allocation activity. So we started looking at asset allocation back in the late 90s, developed an investment philosophy that we still use today. And we use that across a range of portfolios, from absolute return portfolios, long-only portfolios, and in South Africa here, the Balance Fund and the Inflation Plus Fund.
And it's certainly been an interesting start to the year, both locally and globally. A flood of macroeconomic and geopolitical events, from President Trump's return to office and his trade tariffs causing some market volatility, to closer to home, the postponement of the South African budget speech. So I guess my question is, how do you and the multi-asset team navigate this uncertainty or these uncertain times when it comes to investment decision making?
Sure. So our investment philosophy is one that's couched in behavioral finance. So it's a valuation-based approach. We take positions where we see a behavioral opportunity generated by market participants either panicking or becoming euphoric about different asset classes. We try not to forecast any of the short-term economic outturns, but we try to keep ourselves grounded in valuation and then look for rapid price movements, look for signs of behavioral influences in the narratives around those economic events, around those market events, and try and take advantage of mispricing in markets that way.
So maybe you can give the listeners a bit of a perspective in terms of how you actually put the portfolio together for our South African clients, particularly with respect to the Global Balance Fund.
Sure. So we take a specialist approach. So as I mentioned, we've got a lot of experience of doing macro investing, and we'd rely on the expertise of other specialists within M&G to generate the other exposures for the fund. So we have a core bond element run by Eva Sun Y on our bond team. We have a core equity piece, which is also using specialist skills, in this case a machine learning strategy that we've been running now for more than 5 years. And those generate the core building blocks of the strategy. And then what I do is I look at the fund holistically and try and move the levers of asset allocation in bonds, in equities, and in other asset classes to shift the properties of the portfolio and take advantage of what we see as behavioral mispricing.
And just on that point of asset allocation, at the end of January, the Global Balance Fund's asset allocation was roughly 65% in equities, 25% in bonds, and also 5% in both property and cash. So overall, from an asset allocation standpoint, roughly in line with that of the benchmark. So maybe you can just share your views in terms of the fund's overall positioning and also the outlook for the various asset classes from this point forward.
Absolutely. So when we look at the fund, you might say it doesn't look like you've got many views at the moment. It doesn't look like you're taking an awful lot of asset allocation risk, which is, does that mean there's no opportunities here? And one thing that we've noticed is that the opportunities for a simple balance fund, coming into this year, the valuation, the real prospective returns that you can get from those assets has looked as good as it has for a long time, particularly if you exclude more expensive equity markets and if you look at the longer dated bond parts of the bond curve. So what we've done, if you look at the fund and say you've got 65% in equity, you're not taking a view here. Well, actually, if you look under the hood and think about our underlying equity exposures, we're actually taking reasonable amounts of risk out of US markets into the rest of the world. And the way we've done that is we've targeted particular episodes in particular countries and tried to get very good entry points. So we've traded China extremely well tactically over the course of last year, and we still have some long Chinese positions that have been encouragingly performing very well. We've also entered into trades in Brazilian equities, in Mexico, and many other markets where we see opportunities outside of the US, generated really by a valuation-based approach, but trying to focus on where we see price trauma and trying to be contrarian to that. So if you look at our bond exposures, again, it looks like there's not a lot of risk there. But if you look again under the hood, you find that we've taken positions in longer dated bonds. We think both they can act as diversifiers to the equity, which is a significant portion of our balanced fund, for instance. But also, we're looking at behavioral opportunities there too. So we recently, in January, towards the start of January, increased our positions to UK and European bonds at the long end of the curve. By targeting the long end of the curve using futures, we're able to keep some cash in the portfolio that allows us to take advantage of further episodes should we see it, either in bonds or in equities going forward.
Thanks, that's really helpful. And just lastly, we're obviously in Cape Town, South Africa, recording this. Maybe you can share with us what you enjoy most about being in Cape Town.
Well, particularly this time of year, the climate is so wonderful. It's great to get out of town. It's great to really enjoy the outdoors. I definitely appreciate the fine wines you have on offer here and also the fabulous food.
Thanks very much, Craig. It's been really great to hear more about our global multi-asset capability, and we hope you visit our shores sometime soon in the near future.
Thank you.